We continue to be of the opinion that the recent move toward higher interest rates, which in the last few days has stopped, but the move toward higher interest rates will continue. Obviously, if there is a end to the Iran war and more specifically an opening of the Strait of Hormuz, that will have the effect of lowering interest rates, at least for a little while. Why do I still say no? I like recommending short in the Japanese 10-year bond, as well as buying puts in SOFR, because I think once we get the question of where things stand with Iran, at least over the next 60 days, behind us, then I think all of the other factors that point, in my opinion, toward higher interest rates will still be there. And what are those factors? Well, I think the biggest one was look at what's happened to inflation in the last couple of months. We had a move up in the CPI to 3.8% for the month of April. And perhaps more impressive to me was the move up to 6% in the production, the PPI. And there's no reason in my mind that even if we get the wonderful result in terms of the Straits of Hormuz open, that we will not have a further increase in inflation when May is reported in the middle of June. And so that still has a strong impact on people saying, well, gee, with so much inflation, how do I feel about interest rates? And then more importantly, or perhaps most importantly, the famous bond market vigilantes who back in the 80s were dictating high interest rates on the treasury bills and treasury bonds, they can get back into style. And right now, I would say the most notable bond market vigilantes would have to probably be the money market funds. And if the money market funds go to the Treasury, whenever the Treasury, as it does multiple times a week, says, gee, we want to sell $50 billion of T-bills or whatever, and some of the money market funds, who are probably the biggest buyers right now, will say, well, we don't want just whatever it will be 4.25% interest. We want 4.5 or 4.75, or maybe even the magic 5s. So all that is very much available. On top of that, maybe the other most important issue in terms of interest rates is look at the size of the deficit. Are there any examples of major cuts in the federal budget? And the answer is no. Although I will have to say that some of the numbers that are starting to come out of what the vice president is involved in terms of overseeing fraud are starting to have some numbers on that could be, I don't know, maybe something as huge as 25 or $50 billion cut in spending due to less fraud. But that compares to the latest numbers I've seen, close to another $2 trillion deficit, moving us over $40 trillion. Once again, those are factors that can cause, knock on wood, the SOFR puts to go up in price, and we'll see from that. Let us raise a toast to all those factors that can push up interest rates and make those of us who are owning significant numbers of the December SOFR puts, making them happy and hopefully rich.